Hey traders, welcome to Charts and Coffee. Hope everyone's doing great. Happy Wednesday, everybody. All right, so we are in a countdown to, we've talked about this week. What is the most important? Oh, yeah, by the way, I've been going back and forth with the bot this morning. She has the brand new updates for the HPMRs available in the indicator section of the Simpler Trading website. So if you are a premium subscriber of HPMR, check them out. They are freshened up. All right. So what's going on in terms of the data as we scroll into Wednesday? Wednesday's pretty quiet. Of course, yes, we have the crude oil inventories number. We've got a 10-year bond auction, which could be interesting, especially those of you that trade NASDAQ, QQQ, NQ futures, MNQ micro, XLK. I'd keep an eye on those around 1 Eastern. But here's the big thing, gang, and this is coming up tomorrow. Tomorrow's CPI. That's the big economic hot zone this week. Far bigger than Powell and probably bigger than the slew of financials earnings that are coming out on Friday. This is a huge one, gang, because understanding where we are along the inflation rate gives us an idea of real yields. That's going to affect gold, gives us an idea of whether the dollar weakness will continue, whether equity strength will continue, and where we are going to end up in terms of that target rate probability. That's a conversation that I know my Sector Secrets Mastery folks and we had an in-depth conversation, and I'm trying to find. We had an in-depth conversation on that yesterday in terms of looking at something we look at here in the room pretty often, which is where are those target rate probabilities sitting in terms of expectation for where rates are going to peak. And when you take a look at where we are come May, come June, we're actually leaning once again in that 4 3/4 to 5% column. That column, or the 5 to 5 1/4, is where the sweet spot is. If we tick down to 4.5 to 4 3/4, watch how quickly the Federal Reserve starts to sound a little bit more hawkish, course correcting us to more of that 5% vicinity of target rate probability. So we're in a good spot. We're on the bullish side, by the way, bullish for equities, bearish for yields, bearish for dollars. We're on that side of the two columns, right? And that is what we have going on so far here this morning. All right, gang, as always, this show is about your questions. So let's jump on into them. And first up is Prince asks, good morning. Is there a delta between stocks and futures? Let's say gold wouldn't be able to park an option. Let's say GC. Hang on, let me read this. Number one, I don't worry about deltas or anything like that. I don't use Greek. So number one, let's look at the second part of your question. Say GC and gold. Wouldn't you be able to park the option order because you know what the bid? No. In a word, no. Prince, no. That's not. Look, remember, there are 3 elements to, you could use Theo. Some people do that. I don't like that. Here's the thing, gang. Option premium changes. Look, if options were that mathematically certain, no one would lose money trading options. The reason options trading, there's an uncertainty in it. And the reason that I've successfully speculated using debits and not buying into the idea that you can only make money trading options selling premium. The reason I focus on the debit side is because the uncertainty that affects all of us, good and bad, is how does price travel towards the strike or through the strike? Yes, we have intrinsic value. Yes, there's a certain amount of time decay with the options expiration, but the uncertainty is volatility. And that's why I say no. Yeah. All right. Next up is, all right. Good morning. Good morning. Do I know implied volatility is low on SPY this week? Maybe I'm reading that wrong. Puma, I don't look at those things at all. I don't look at implied volatility. I don't look at percentile. I know these are, it almost sounds like heresy, right? I don't look at these. And what I would say is ultimately, if I'm looking at volatility, I'm looking at price movement ranges. I'm looking at 6-month historical volatility. And ultimately, implied volatility in terms of traders who collect credit, that measurement's going to give those traders an understanding of where they are in terms of what they should anticipate writing premium for, right? But I don't, Puma, I'll tell you what, I don't know because I don't look at it. It doesn't affect my trading whatsoever because I am looking at volatility, but I'm looking at it from a historical standpoint, not IB percentile or IB rank or anything like that. All right. So yeah, so far, wait a minute, Rog. You don't use you don't use Greeks and you don't use IB rank or percentile? I do not. I do not. Um, all right. Alex, hey there. Throw the CNC crew a bone tomorrow and do another CPI. I'm going to be doing that with my mastery folks tomorrow. Maybe we'll do that later on. Maybe we'll take a look at some February hot zones. Uh, but yeah, I'm going to be doing the CPI release with my Sector Secrets Mastery folks tomorrow in order to follow up on the live session that we did with non-farm payroll last Friday. All right, next up, thoughts on long GDX, sure, or short snow and short snow. Okay, hey there, Stephen. Before I even think about GDX, we're going to go a little upstream to GDX and look at the GC. Is gold moving higher? And gold is in an uptrend. Gold's in a very nice uptrend. So now we have some directional bias, a directional preference for the stocks that would track with gold futures. And therefore, yeah, I would look for a pullback buy on GDX as long as GDX syncs up with gold. I like when crude syncs up with energy stocks, right? There is going to be that synchronicity I prefer to see. So I would buy the dip there. Your other question is snow. I have no skin in the game in snow, so I just want to make sure that's super clear. However, what would I do with snow? This really wouldn't end up on my radar for anything other than something that's already occurred, which is an oversold buy. Let me highlight what has happened. It's not going to help you now, but at least see the pattern and you can make a decision about what you want to do. Perhaps next time this happens. We have a Darvis support level you can see right here. So that's right there. We have an oversold stochastic. This happened in a red trend. Not great, but here it happened again in a yellow trend. That is a buy, but that's a buy in this area, not in this area here. However, yeah, if we have a neutral market, overbought, oversold, throw a slow stochastic on that chart. I use a 21K 3D. It just works really, really well. So that would be so unlike gold or GDX, which would be a trend following by the dip, snow would be an oversold buy that we just left the station on just recently. All right, next up, Boyle. Sure. So if we're going to look at Boyle, again, what's upstream of Boyle? Natty gas futures. So you take a look at natty gas. This continues to move lower in a downtrend. Now, by the way, those of you that are interested in a little bit more info on natty, let me show you something here. This is over at countdowntrader.com. And let me show you what that is. Now, over at countdowntrader.com, Trish put together a great update on seasonals and natty because it is a question that I get quite a bit. And so here you go. If you go right to countdowntrader.com, that's that URL right there, getting ready for natural gas seasonal tendencies. So check that out because we're coming up. We're not quite there yet, but we're coming up into the seasonal beginning of the uptrend for natty, despite the fact that price and technicals continue to be quite bearish. All right. So if I'm looking at NG, that could track to UNG. Of course, yes, that could then track to Boyle. Now, what's the difference? Natural gas futures, the natural gas ETF, and then ultimately, this is that ultra. They're going to all track the same way. So start with natty gas futures or and then take yourself to UNG or Boyle. But it's not going to be any different than the way that I'm analyzing and determining what's next for natty via the futures. So Vitaly, hope that makes sense. Check out that update. You'll see that come February, we might see this downtrend start to transition. So there may not be much more of an opportunity to think short in natural gas because we're going to come right up against that seasonal tendency. So we'll see if the technicals win or that seasonal tendency wins. All right, what is an inside candle? It's a candle where the current, so it's also called a harami. If you're a fan of Japanese candlestick trading patterns, it's also known as a harami. So it's a candle that is inside the range of the one that came before it. So look at the high-low range of one candle. The candle that comes after it, is it trading inside that? And it's a nice pattern. It's a powerful pattern for breakout, breakdown setups, or even just to acknowledge if there's a pause in the market. All right. Could I speak briefly about the relationship between gold and bonds? Sure. Gold and bonds are joined at the hip, if you will, because they are both part of the real interest rate conversation. What's an real interest rate? It's the nominal yield of a bond minus the rate of inflation. And what ultimately that tells us about gold is that it has an inverse relationship to the real interest rate. So if real interest rates are flat, gold should be able to start to rally or stay flat. So it should be fairly stable. So bonds and gold for me, they intersect in understanding how real interest rates, which again is a nominal yield of a bond minus the rate of inflation, affect gold. And that's really it for me. I don't really look at it any other way other than I would prefer to see them move together. Because if yields are dropping, real interest rates should be narrowing, and that should give gold an easier path to the upside. So for me, they should have a positive correlation. They should have that more of a sympathetic correlation. So thanks for the question, Sam. All right, next up, Pedro. Good morning. Will the new DPMR be separate from the HPMR? Yes, they're two completely different indicators. Hourly price movement ranges are designed on intraday hourly data feed. It's a completely different data feed that I use. It's a different way of crunching those numbers because it's intraday based on movement specific to the day of the week and the hour of the day. DPMRs are daily price movement ranges. So now we're looking at 6 months of data for a single session, but also specific to the day of the week. And so they are completely different indicators, and they're used completely different as well. As far as will we get them in SSM, Pedro, that's not the plan at the moment. I haven't decided yet, to be quite frank. We're still about 9 months into testing the new data that is feeding them. The process is the same that it's been for a decade, so I haven't changed the process, but we are improving the data, and that's where the best leaps in both the HPMRs and the DPMRs have been. We've just got better data and a better way to look at historical volatility. Big kudos to the bot for that. So yeah, shout out to the Lorna bot for that. As far as what I'm going to do with the any kind of free pack, I really don't know, Pedro. I'm not really sure yet what we're going to end up doing. Quite frankly, I'm still making sure these things are really rock solid in terms of the really stress testing that we've been doing on that indicator. All right, and that's for all of my indicators, right? I mean, when we release an indicator with a class, minimally it's 6 months to a year. This is going to come up on about 10 months by the time the class is here on March 4. All right, next up, thanks for doing these. My pleasure, Jim. Can I explain what drives the difference between ES futures and SPX? So the price offset. So again, always look at the direction, right? The values are different. It's the same thing between the ES and the SPY to a lesser degree. I mean, it's a different value, but it's similar enough. It's 390 on SPY. You can see we're trading at 39.50 on ES. It's just a different scale. They're directionally going to be pretty similar, if not identical, but the value is different. The SPX value is different. Remember that SPY, ES, and SPX are all measuring the S&P, but don't get thrown over the price. You're not going to see SPX move differently than SPY move differently in terms of direction than ES. And so the price offset is just that. It's just a price offset. But is it moving differently than ES? And you'll probably see, Jim, it's not, right? Okay. Next up, thoughts on XLY. Sure. Consumer discretionary. Yeah, consumer discretionary has been tough. And the reason it's had a tough go is because of Amazon and because of Tesla. And if you take a look at both of these in downtrends, why does that matter to XLY? Because those are your top two heaviest weighted stocks in that ETF. And so the short side is still pretty interesting. Although, back to countdown trader, those of you that are keeping up with the content over there, Trish had another great update. This is back on the 6th. So just a couple days old. And let's talk about bottom picking. Bottom picking for me is really a four-letter word. However, there is a season for that, right? There is a season for that. And the season for that is as we go into the first, I say 6 to 8 weeks of the new year. And if there's going to be a transition in a number of downtrends, we're going to look for that opportunity the early part of Q1. So check that out in terms of how I'm viewing some of the downtrends, most especially in tech. As far as energy goes, I'm a little bit more interested in energy on the weekly. This is something that we do in the Sector Secrets Mastery. We have a longer term conversation once a week, weekly position trades, more of a portfolio approach. And I share what I'm seeing and what I'm doing. XLE could be a buy the dip on the weekly. I'm not too keen on what I'm seeing on the daily right now. And it kind of goes back to that question about gold and GDX. If I don't have energy stocks and energy itself in a decent sync, I'm not loving the clarity that I've got. So XLE, meh, right? So do I think Greeks are completely useless? For me, yes, I don't need them. I don't want people thinking, Rog, you think Greek? It doesn't matter what I think, frankly. It only matters what I use. I don't use Greeks. If people have, look, some people like mayonnaise on their hamburgers. Some people like pineapple on their pizza. I'm not going to yuck somebody else's yum. It's just not my thing. And so, no, I don't use Greeks. For my process, they are unneeded. All right, next up, what's the mammal behind you? Oh, you can see my dog? Come here, pup. Come here. Come here, girl. Come here. Oh, you want out. She wants out. Oh, she's gonna get her morning carrot. That's what she's waiting on. All right, hang on, girl. I gotta finish my show. That's my puppy. Yeah. um, BOA and others like Homebuilders, stocks. Please look at XHB. Sure, sure. There's two ways we'll do that, Fierce. There's two ways we'll do that. One, let's look at the daily. It's still in chop. However, and if we're looking at XHB, it would behoove us to look at ITB as well. So let's go do that. Now, what I'm bringing up is something we use regularly in the Sector Secrets Mastery. And gang, this is the easiest and the best way to look at relative performance. And that is to look at the high concentration weighted stocks that are weighted in an individual index or sector and comparing them to each other, right? And this is the multi-trend. And the way that we do that is using the trade flags, which give me an idea of what the 8, 13, 21, and 34 EMAs have to say about momentum, aka Momo, and the trend. There's a lot to like in XHB, just not XHB yet. Take a look at DH Horton. Take a look at JCI, Lennar. That's where the strength is at, right? And then also take a look at ITB. The difference between the two is less about the stocks that are in these two ETFs and more about the way they are weighted, all right? The way they are weighted. But there's a lot to like about ITB itself. There's a lot to like about the stocks heavily weighted. So I would lean towards ITB and ITB weighted stocks. Fierce, slight difference, but that watch list building is really where I feel when I look at upstream, what came before my winners and losers? What was the process that came before my success or my failure, my losses, my gains? It's going to be watch list building. And sadly, most traders spend about 80% of their time trading and 20% of their time thinking about what and how to trade it, or mostly even what. Forget the how, what to trade. To me, it should be flipped around. That's what we do in the mastery. 80% of the time is what are we going to trade? Then we segue to which direction would we prefer. If I don't have directional bias, we don't move forward. And then lastly, it's the limit order, it's the stop order, it's the price trigger that gets us in. And that's why I would definitely say, um, that this process that we're doing right now, Fierce, ITB versus XHP, that process is the most important we can do. So I hope that helps. And again, if you're looking for relative performance, if you're looking for where strength will get stronger, weakness will get weaker, if you're looking for where there could be transitions in the trend, that's going to be it, right? That's going to be it. So ultimately, we're in a very interesting time. Check out Countdown Trader. I think you're all going to like, especially the last two updates over there at the site. All right, gang. As always, thanks for joining me for charts and coffee. Appreciate you guys. Caffeinate and dominate. Remember, CPI tomorrow. I'll talk with you soon.